What is up, everybody? Welcome to the Average Joe Dividends YouTube channel. In this video, I'm going to show you the buy I made just this morning. Usually I do these buy videos on Monday, but we had a holiday with President's Day, so here we are with today's buy video. And what I do is I deposit $100 into my taxable M1 stock brokerage account, my Average Joe Dividends portfolio, and I do that twice a week. And on Mondays, I let M1 do the picking. What I mean by that is I have auto invest on, and then the money goes into where we're underweighted. We can see we're underweighted right now in the ETFs. Looks like we're balanced out in the dividend portfolio, but of course this is after the buy, so we'll see where the money went. But I'll leave a link below if you're curious to see what's in the portfolio as far as companies. And right now in the holdings tab, let's click on that. There's 52 positions with most of the money in SCHD and BST. The largest individual holding is NVIDIA. But I'll scroll down, just kind of give you an idea of what's in the portfolio. And it's pretty well diversified into blue chip stocks. It's a good balance of different sectors, including energy, technology, just consumer brands, restaurants like a Starbucks, things like that, Yum Brands, Coca-Cola, just a lot of household names in here. And just like I said, a lot of diversified positions in here. And these are all positions that pay a dividend, and most of them pay an annual growing dividend. And we'll get into that as well as a new announcement with one of the positions where they just announced a dividend increase. So let's go ahead and we'll look at the portfolio really quickly. Just the overall performance over the last year with the money weighted return of 16.08%. You count dividends in there, it's over 20% over the last year, so it's doing quite well as far as just the appreciation in the stock price of the portfolio. We can see the dividends earned over the last 12 months too, over $11,698. And look at the last month, and we'll see how it's been doing. Up 1.63%. The last week, up 0.4. I think we're down just a tiny bit, pretty much flat today, down 0.08%. Let's go into the activity log, and we'll see a few activities, events that happened on the 14th. Actually, M1 has a one-day delay, so these dividends rolled in on the 15th for AbbVie, 43.32, and then O, which is a monthly payer, 13.38. So these dividends are going to be dripped back into AbbVie and O. So we're going to see O and AbbVie's next dividends go up. And then we also saw on Friday there was that buy with Apple, and this didn't even move the needle as far as my dividends, but it bought a tiny fractional share of Apple with that dividend drip in there. So with the three buys, two of them are going to be AbbVie and O, and the 56.71, those are dividend drips. So the $100 that deposit, that's going to be into the single position. We'll see what that is. So AbbVie again, this is 43.32. This is a dividend drip again, and we'll see what this bought. So I bought 0.22146 of a share of AbbVie just with a drip in there. So it looks like all the $100 plus a penny that was left over went into Merck. And Merck has not been doing great lately. Let's just take a look at, and we'll see what it's been doing for us. We'll go to Merck, and we'll look at like the last like 5-year performance of Merck. It is barely up at 5.6%, but let's just take a look at where Merck has been. It's been in the 120s, 130, around there very recently over the last year, and we've just kind of been tumbling down. So what we're doing is we're buying Merck on, quote, sale. We'll see if Merck continues to tumble or if it's going to, maybe rebound here. We'll see where Merck's low is going to be, but since I have auto invest on and then having M1 do the choosing based upon my allocations, Merck is where all the money went because Merck has been going down. And then that bought me 1.22043 of a share, so over a share of Merck with that $100 deposit. And then the last buy, again, this is a dividend drip. And Realty or Realty Income, that is a monthly payer, and it bought nearly a quarter share at 0.24425 of a share of Realty. So let's go ahead and we're going to jump on over to my Google Docs spreadsheet. We're going to kind of go over all the fields within this sheet, and I'll leave a link below so you can see how I track my dividend stocks. And you're welcome to use this sheet. Of course, you'll have to put in your own stocks into it, and put the ticker symbol in here. The share price, you can use a Google Finance function. You can see how I'm pulling that with price, and then the average, that's using a VLOOKUP on the M1 data tab. So you'll have to utilize that as well. You'll have to paste in your own information. And the shares also using a VLOOKUP on the M1 data tab. And I'm just going to show you how that works in a little bit, because we're going to grab some data from M1, and it's going to update the average share price, the shares, and my cost basis for the 3 positions where I bought more fractional shares or whole shares. In the case of Merck, you can see here's the current value of each position. Here's the cost basis, and here's my gain or loss for each position. Here's gain or loss expressed in a percentage. Anything above 25% will be in green. And then here is the current dividend paid per share. I've marked SCHD as in purple because it's variable every quarter. The dividend changes. In the case of Home Depot, where we're expecting a dividend increase, we're going to see this go up here soon. Here's the current yield. Here's the current yield on my cost. Here's the pay date, and everything on the sheet is arranged by the pay date. And we can see we are in the month of February, so we are in the medium green. You can see the light green for January, medium green for February, and then we can see some stocks have announced their dividends for March. That's dark green. And the reason I kind of separate that, I'll show you the color key here, is the light green signifies the first month of the quarter, medium green is the second month of the quarter, and then dark green is the third. And the third quarter always pays the most. So kind of the dark green is the bigger month for payment. So March is going to be the big month. And we, again, of course, we are in February. We'll take a look at the current dividends that have been paid. And so far, I've received 142.18 in the month of February. We're not even close to being done. We have some heavy hitter coming, BST. Look at that one, and we can compare the 142.18, and then we can see what the next dividends are going to be. And this does not include with the drips, the 143.42. So you can see with dripping it, the effect there. We'll count it up again once we update the sheet, because AbbVie and O, those dividends are going to go up, as well as Merck. So in April, approximately 9th, Merck's dividend was going to be $11.50, but we're going to see that go up with the buy, the $100.01. And then also we're going to see tomorrow is the 19th, so I'm going to get a dividend from Procter & Gamble. Let's go ahead and actually look that up real quick, and we'll put that in here. So dividend portfolio, Procter & Gamble is within that slice, so we'll go there, and you can look at M1 and see what your dividends are going to be. Sometimes if it's after the X dividend date, so we'll pull it up by a view of 1 month, and then we can see dividends earned are 10.58. So we'll put that in there. That is the dividend I'm going to receive tomorrow. I'll wake up tomorrow morning and I'll have 10.58 in the account. We'll update this. What I do is I put the total dividends received. So to count that up, you'll see things go up here, like the dividends gain or loss. It's going to change the yield percentage, things like that, as I hit enter. Of course, the total dividends are going to go up there, but my gain or loss actually is going to change on that for Procter & Gamble because of those dividends going back in there. Also going to, let's see here. Yeah, I forgot there's another one, actually, A.O. Smith. So don't want to forget A.O. Smith. Let's go look that one up as well because that dividend's going to appear. We'll just double check and make sure it's going to be that $4.67. And so A.O. Smith is in the 12 more dividend slice. I should probably consolidate these and just have it all in one, but I haven't done that yet. So there's A.O. Smith there. We'll take a look and see for the last month. There's the dividends earned, $4.67. So I'll also receive this one here. You can see how these dividends are just incrementing and getting bigger and bigger. C.A.O. Smith. So tomorrow morning I will wake up and I will receive $15.25. And of course, what's going to happen is I'm going to drip those back into Procter & Gamble and A.O. Smith. We're going to see the next dividend is going to go up for these. Same how we're going to see the next dividends for AbbVie and Merck go up. So let's go ahead and we're going to grab that data from M1. We'll go to the Holdings tab. What I do is I grab everything starting from the name column. Grab that data. We'll do a copy paste onto my Google Docs spreadsheet into the M1 data tab, and it's going to update the three things. It's going to, we can actually do it from here and show you. It's going to update the number of shares, cost basis, and average for those three positions where I bought more shares, which are Merck O, and what was the other one? Merck O and AbbVie. So we'll do a paste special into the A column. It's only going to update those three where fractional shares were purchased, and we'll go over the changes here real quick to the portfolio. So we're going to scroll over and we can see with Merck, remember the old dividend was $11.50. So in April sometime, April 9th approximately, it's going to now pay $12.48. You can see the $100 what that did there. And then let's take a look at the dividend drips. And first one, AbbVie, it's going to move from 43.32 to 43.68. And then we can see O moving from 13.38 to 13.45. So let's just do a count up of the dividends again. So 157.43. I'm going to put that over here on the dividend tracker tab. We're going to go over the dividend tracker tab here in just a minute. So we got that 157.43. But let's take a look at the next dividend that's going to be in May, 3 months later for these same companies. So 157.43. It'll be 159.10. So you can see just the power of those dividend drips. So let's scroll to the bottom here. We're going to take a look at the cash flow averages, the monthly, quarterly, and annual, and see how these have changed with the three events, again, the $100 deposit and those two dividend drips. So the old monthly cash flow average is moving from $1,042.05 to $1,042.56, and then quarterly moving from $31.26.16 to $31.27.69, and then the annual dividends are moving from $12,504.63 to $12,510.76. We're going to take that monthly cash flow average, the $1,042.56. We're going to put that onto the monthly average dividend tracking tab. We'll scroll all the way to the bottom here. Put that 1,042.56. And that added 51 cents of additional monthly income with the $100 deposit, AbbVie, and O drips. You can see that right there. So moving it up quite nicely. And then we have an event we have to account for. We're not going to do the bottom one because it hasn't happened yet. It won't happen until tomorrow morning. But we do have an event here with Waste management, I alluded to this earlier in the video, how there was a dividend increase, and I get these all the time. You can see like a Vista, this, when was this one? On the 12th. 3% increase. Cisco, also on the 12th. So at Yum Brands, there's one here on the 6th, and then another one on the 5th. You see what's happening with this dividend portfolio, how I'm constantly getting dividend increases from all these companies. So not only from my own deposits and drips, but these dividend increases that they're happening automatically with these companies raising their dividends. Look at this. Waste Management with a double-digit increase, 10%. We're going to see what this does to move the needle on my average monthly dividends. And so I'll show you where I look this stuff up at. We'll go back to the dividend portfolio tab. I have a couple links here, and for dividend raises or dividend declarations, what I did was this morning I went to Seeking Alpha and looked up the latest dividend raise announcements. We're going to have to kind of scroll through this a little bit, but we'll see if there's any new ones. But we'll scroll down, we're going to find Waste Management. And this one was announced like around midnight is when it came about. Keep going here. Scroll, scroll, scroll. There it is. So here's Waste Management. Raises dividend by 10%. So they raised it from old dividend of 75 cents to 82.5 cents. So what we're going to do is we're going to update my sheet with the new dividend, 82.5 cents. We're going to put the new payment date plus 1 day because M1 has a 1 day delay. So let's go ahead and do that. And we're going to update the sheet also with the new monthly average dividend. So we're going to find Waste Management. They're here on line 6. You can see I have 10.41 shares. We can see here's the old dividend, the quarterly dividend for Waste Management. We're also going to see here's the current or dividend or next dividend that it would have paid without this dividend raise. So we're going to see how much this goes up, as well as the monthly dividends for the portfolio. So let's go ahead and just remember the 781. We'll kind of hard code this. You can kind of see the difference change here. And then I think it was 82.5 cents. Yeah, 0.825 we'll put in there for the new dividend, 0.825. And we'll see the 781 goes magically up to $8.59. You see how that went up. And then we have to change the new pay date for Waste Management, which was 3/28 plus 1, so 3/29. We're going to put that date in there. And then we're going to reshuffle the deck because Waste Management is now going to be paying in March. That's the beauty of these. Once they get done paying, 3 months later, they're paying me again, with the exception of BST and O. Those are paying me every single month. And then BST with over $500 a month with just that one. So we're going to do the sorts. It's going to shoot Waste Management down here to its new pay date. So you can see there they are, 3/29. Old dividend, 781. Now moving up to 8/59. This also changed the monthly cash flow average now to 1,042.82. So let's go ahead and put that update there. So 1,042.82. 1,042.82 right there. And then added an additional 26 cents every month just with Waste Management. And this, again, I'm getting these dividend raises. You can look at this sheet, look at the events, and just see what's raising this average monthly dividend every single month. So I'll take that. So just today, we've had a change of 77 cents every month just in today alone. And then tomorrow, it's going to happen again. It's not going to be as big as these two because it's just Procter & Gamble and A.O. Smith. It's like $15 being dripped in, but it's going to move it up a few cents. And every little change in here matters. It just keeps going up. So let's go to the dividend tracker tab. I've been doing these dividend videos since January 2021. You can see the portfolio value, what it was there at 18.7, rounded to the nearest $100. Here are the dividends paid in January 2021. Let's fast forward to 2025, and we can see where we're at right now in February. And here is the portfolio value rounded to the nearest $100. You can see we are at all-time highs for portfolio value. The last was November 2024. And let's just look at, the dividends so far, 157.43. Last year, the dividends were at 622. We're going to exceed that. It's going to be higher than that. We can just see, where we're on track from January 2024 to 2025, from 611 to 638. So we're going to see that go up, and as well as March 2025, this is going to be well above $1,500. I'm just going to say it right here and now. And we can see here's the average monthly dividend for the portfolio. And here's the monthly increase just from what I've done in February, or what the portfolio has done in February with the drips, the $200 of deposits per week, and dividend increases. And it's increased the monthly cash flow by $5.84. And it's a month-over-month gain of 0.56%. You can see the annual dividends is up to $12,513.88 now. Annual increase of $70.12. And this is just for the month of February, adding the $100 deposit up to $500 there. So we're going to close out the video. We're going to go to my total net worth statement. And this dividend portfolio, this is 15% approximately of my total net worth. And that kind of gave me the confidence to go into individual stock investing, because I have a huge kind of fortress built up of ETFs. They're well diversified, and most of this portfolio is an ETF that's SCHD, and I have covered call options in here, which is well diversified. It isn't just one company that they're trading covered call options on. Something like Tesla has one of those where just one stock you're relying on. It has several in there. I forget the count that's on this. And this one's done actually better than SCHD for me as far as stock appreciation. And it pays a huge, interest dividend as well. So I can't complain how BST has done for me. But let's go on over to my total net worth statement. I'll show you what the other 85% of my net worth is in. Like I said, it's mostly in ETFs. You can see over at Vanguard, I have an IRA, traditional IRA. I have a Roth, a very tiny Roth one as well. Here's a taxable stock brokerage account. So over at Vanguard, $490,000 of that, of my net worth, is wrapped up in boring ETFs. Here's my current employer 401k. All of it isn't in an S&P 500 index. If you're younger, you're 20, 30 years old, I would just do 100% into stocks. If I could go back in time, I wouldn't have messed with bonds. I used to have bonds. Of course, it was mostly stocks, but I wouldn't even mess with bonds. And I'm 51. I don't own any bonds anymore. I'm just 100% stocks with cash. Of course, what I'm doing is not investment advice. I'm just showing you what I'm investing in, and showing you how I'm doing it and building my net worth here. And M1, I have an IRA over there, and the current value is at $725,000. This is my employment pretty much from 1996 to the year 2019. This is 401k transferred over to an IRA. And then here is that dividend portfolio over at M1. Then over at M1, I have a 1-year emergency fund, and that's getting me 4% interest. And then over at Synchrony, I have another emergency fund over there. This is approximately 6 months emergency. And then over at Capital One, when I reach about $10,000, if I go over that amount, I start pushing money over to Synchrony. And so that's why it's at an even $10,000 there. And this is approximately 2 months of spending kind of cushion I keep over there. And then here is my home value. The only reason I really track this, a lot of people will criticize tracking your home value and your net worth, especially if it's a significant chunk of your net worth. Your home value doesn't really do anything as far as your financial independence, except for when you pay off your house, and then it lowers your expenses. For me, it's more motivation of trying to pay off my mortgage. That's really the only reason I track it. It's not really a huge line. It's less than 10% of my net worth. So, so to me, really, it's not a big deal. But here's my two liabilities. Right now, here's my current balance on my credit card. I don't carry a balance over and pay interest on it, but here it is right here. It's not due till I think March 9th, so there's no sense paying it off early here. I'll just accrue interest on my money sitting over here in cash and pay it. Usually, I pay it off maybe a week or less before it's due and accrue a little bit of interest. And here is my other liability. Here's my mortgage, what's left on it. But here's my total net worth, all-time highs, 1.832 million right now. And it's a good number to have. But of course, if the stock market goes down, it could dive quickly. Here's that breakdown in stocks, home equity, and into cash. And then here it is in pre-tax. So you can see, you've heard the term like a 401k millionaire. You could say I am in that boat because I have that in IRA 401k, over $1 million there. And a lot of people use the term like Coast Fi. I don't really have to really invest that much more into my 401k, but I am investing still into my 401k. I'm contributing up to the match. Actually doing I think 5% right now, and then I'm still trying to build up a good cash cushion with extra, as well as investing in taxable, so I can build my freedom, because I'm not 59 and a half. I can't access those accounts technically without penalty. So I think I built up enough of a fortress with my my retirement over there. But here's my after-tax freedom. Over $700,000 there. Here is the breakdown U.S. and international, and I've also breaking down my average monthly dividend for the IRA 401k, as well as the interest on the savings accounts. You can see if I had access to all these accounts, I could just draw on average $3,486.30 without selling a single share. I could just be drawing that interest as well as dividends from these accounts and live in perpetuity. And this would be going up as dividends are raised. And this is going to be a much higher amount also by the time I'm 59 and a half. That's about 8 years from now. So that we're going to see this go up significantly. And you see how I've been tracking my W-2 income net against my expenses, and then tracking that gap. My goal is to always have a gap between my W-2 and then my monthly expenses. Of course, that's not always possible. If I have an expense that exceeds my W-2 paycheck, of course, I'm going to be in the negatives. That's happened before, like when I was building my home. I had some expenses in there, like moving and things like that, or little down payments here and there that I had. And let's go back to, I think June was one, or no, I was really close when I started putting some money down on the house as far as like deposits, kind of things, and that kind of made it go zero there. But for most months, I'm in the positive on the gap, and of course that helps out my cash position. You can see how also my net worth has gone up. We're over 1.8 million, but I was back in the 1.2s or back into 1.22 back in December 2022, and that was not that long ago. And there was not a big windfall in there, or like my house, didn't like jump in appreciation, or I didn't have, win the lottery. There was nothing like that. It was just the stock market on my current assets just going up. That's really all it's been, or just, and also buying more shares as well, just investing into the stock market as well. So that's what the secret's really been for that. So that's all I had to show you guys for this video. And again, we'll go into those buys. It was technically one buy with a deposit, and it was all into Merck. And with that additional 1 cent there, these were those were dividend drips over there. So So I hope you guys got value from this video. If you did, please click the like button. Also subscribe. Next video, that's going to be me going over what I pick on Thursdays. Usually I've been doing them Thursdays, sometimes even Wednesdays. What I do is, instead of just letting auto invest do its magic and then rebalance the portfolio, I pick 5 stocks and I put $20 into each of those stocks, so you see what average Joe is picking for buys. So again, like, subscribe, do all that good stuff. I hope everyone has a great rest of their week. Everybody take care.